Good evening. Welcome everybody to our live FB. And if you are the regular, please say hello. And at least I know there were some of you who are familiar in the span of the trade VSA world. So please share and like this Facebook. Okay, would appreciate that. Okay, good evening to our live FB, and it's always great. Thank you for coming. All right, as we get started right now, so those of you who are familiar, let me know who you are and give me a thumbs up as we start. Now, good evening. Welcome to our live Facebook for the Wednesday night. And it's been hello Ong. Good to hear you. Good to see you again. And it's already 21st of February. Time passes past. And I think this Saturday will be Chap Gourmet. So it's already still in the post-Chinese New Year rally. Now, of course, many of those who've been following me would have known that earlier on, and also following our system, the Trade VSA Pentagon Guide, we may have known how much has the market been really moving up. Of course, you can also catch some of the great stocks in here. And I do hope that you have benefited from some of our teaching and the use of Smart Roby, as well as some of our members been really getting into the market, especially right now we have this Chinese New Year rally. So it's great to see it. But tonight we'll be talking something a bit more in the distance, in the future, okay? Because in the past, many of you have known, going back to year 2021 and year 2020, it's already been quite some time, isn't it? We have 23, 22, 21 and 2020 was the time of the rubber glove. So many 2 years has passed, or maybe coming to 3 years. Is it time to reassess back the rubber glove? I do know some of the people are still holding on to their rubber glove stock which they have bought, which is much higher. Good evening, Chetna. Good evening. And I'm wondering whether it is time to dispose of it, or could it be just a passing crowd or passing rain, and the rubber glove is ready to move higher to this pass. Good evening, Tengku. Okay, so this is why we want to be looking into the rubber glove. You'll be looking from a perspective of what's happening, looking at the past earnings, and I'm going to be introducing a very, very interesting fundamental indicator. I hope you'll pick this thing up tonight. Indicator that I'll be using will be called PEG ratio. Or keep in mind that will be something we'll be talking about. So tonight is reassessing the glove. So we're going to be looking at what's happening to the rubber glove stock, right? And we'll be talking about if the rubber glove stock still worthwhile to hold. And we'll be checking out and looking for some growth rubber glove stock, or even if they are still undervalued, and where are these and which one is I'll be talking about in here, and going to give you a summary of tonight. Now, of course, I cannot move ahead without quoting this father of value investing, which is really much of what we are talking tonight, and why we want to be taking a look at the rubber glove industry, as we say, as of now. So you can see from here, right, what we are really trying to is to do what this gentleman is saying, buying a company at a fair price rather than buying at a wonderful price. I think we all remember, right, buying Top Glove at what, double-digit price now, which is only $2. Remember that day? That was a wonderful price. But was it a fair price? So that's a question we need to ask ourselves. So tonight we attempt to answer that. And by learning this PEG ratio indicator, you probably know going ahead whether it is reasonable, worthwhile to hold it or not. And more importantly, we want our listener, that's you, the audience, to learn it, especially our members, to have the logical approach into this market, seeing whether the rubber glove is worthwhile or not. And the key word here is fair price. Okay, the third is fair price. Now, as we go on, let me just remind the audience, we are in the year of the dragon. Now, we pass on the Chinese New Year dragon, and year of the dragon has been said to be very, very a good year. All right, been said very a good year, despite we have some of my friends who are feng shui saying so and so forth, but let's be the judgment of the fact, be a part of it. And you can see dragon year, if you look historical year, it's always been a positive year going back to the last 1900 to 2011. And also being 2024, as I said many times before, I have more and more luck with this, is understanding the facts and the figures that backs up many of these macroeconomics things that we talk about in here. Good evening, Umi. So here is 2024. Definitely good, looking good. We have the US presidential election, and we all know US presidential election tend to give a very, very good return on the year it is. Now, if you look at the courtesy of VSA 360, good evening, Nora. Good to see you coming again. The KLCI. Now, for the first time, we have the highest year-to-date return in the last 8 years. Now, reason is January gave us a 4% return, and February has been a 2% return. So, of course, we're going to be seeing some pullback. The best time we see that was 2017, right? That was a time where we see a lot of rising every month, but we have 2 good months. So, incidentally, month of March may see a correction. Now, keep in mind, we already 6.8% return. If you look back, we have not had that except for 2017, which is quite far back, isn't it? You come to think of it. So that's why the VSA 360 give you this kind of visibility, and you can see it in front of your eyes that why we say what we say, not based on our feel, but based on facts that is presented to us, in this case from the VSA 360 seasonal, monthly seasonal. So definitely we will be seeing the correction months will be coming, right, for the month of March and April, no doubt about it, because we are seeing already in the US market the corrections are happening in US. And as I said before, many times our KLCI is a lagging. They always slow to pick up, okay, and slow also to react. So that's why we're going to be getting this sell-off very soon that we see in the KLCI. So make note of it in here. Like I said it many times before, how we knew that the beginning of December was the Christmas rally. Indeed, we were also looking into this indicator so far that we have in here. Now, of course, with the market this evening, do you all know what is the closing? Okay, if you don't, let's take a look at it. The FKLI futures closing, or maybe I'm just going to go to the okay, FKLI futures. Do you know what is the closing? Let's take a look at FKLI futures, and we actually close at 1555 for our futures. So 1555, which is already Hong Leong target, because last year closing was at 1444. Again, many of this, if you take the average, which is about 1621, the lowest was 1545, which already we hit 6.2%, looking for it, and the highest was CGS. Who knows, we might hit 1755. I always intend to bring this to our members, is to show you how far and how close we are in the target. So right now we are at 1550 with a lot of analysts giving an average of 11% return. We are already 6.8%. So meaning when the market hit 5%, close shop. We already hit the target. All right. So is that where we are looking for? But definitely the Malaysian Madani, which is led by the 10th Prime Minister Anwar, have to take some credit, as we see one of the hypotheses that I was talking about was the foreign fund flow. We've seen the foreign fund flows in Japan and Korea started to boom up. So some of those funds are really flowing into our market, the KLCI market in here. So this evening we are at 1551. So let's see if this market can go to 1621. All right. Now take note tonight, for those of you who's watching, I hope that you have your trading view lock-in or trading view account. All right, you don't need to be a VSA 360 member to use it. And of course, if you are VSA 360 members, I've showed you how to do these indicators to put it in to see how reflective or how potential other individual stocks from a fundamentalist viewpoint, because we will be looking at these rubber gloves stock in here. Now before that, let's look at the KLSE. As I said before, is 1554, and what we are seeing now, we are seeing a lot of strength. All right, and I would say that we are somewhere in the midst of a stage 2 uptrend shares. There's still a sign of strength coming in here. So usually the market will go, took out the upthrust, so that there's a lot of power coming in, right? It's broken higher and it's trending higher too. So we need to be ready for the next step, which is aligned with the US market. So here, I would like to give you a heads up. Then when we talk about align with the US market, because US market, if you look back, you can catch me also on Friday morning, okay, on the breakfast show. On the Monday morning on the breakfast show, Smart Robbie, covering US. Next Monday, I'll talk a lot about US market in here, especially US market has a lot of room moving up. No doubt a correction is good, but if you're looking for going higher, and also cover for our Muslim fans some of the Sharia compliant shares that you can look into it. So definitely you can see from here, the stage 2 shares is in the mid. So in the KLCI, you can see from here, another line change. This is really good. We have a good support at 1530, right? So we will see SOS for the next 2 bars going up higher. I do think that the possibility we will hit a resistance very soon. So be ready for that, and a pullback and a fall. We already have a pullback here, a very small pullback, and then a follow through. That's very nice in here. So generally, I would think I have to inform our reader in here that this market will correct very soon, no doubt about it, because we've seen January and February has given us 6.8%, so that is some of it, but many of these are coming also from the good economic report that we've seen from the construction sector and also the finance sector in here. All right, now what's happening to our foreign fund flow now? On the 7th of February, this was on the 7th of February here, right? We've seen foreign funds were, leaving off. And as I said before, we need to have the foreign funds coming in. So lo and behold, now that you see that, let me just erase this. Right, this is the 20th of February. Right, and what we've been getting, we got lots of foreign funds coming. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So 12 days of foreign fund coming in, and that's why the market go higher. So it's also interesting in understanding the overall economic thing in here before you go down to each sector. Now the sector that we're going to be going to tonight is definitely the rubber glove. Now 2 news that actually comes out on the edge that take my attention. This was on the 28th of December that the rubber glove, JP Morgan turned bullish. Glove turned bullish on Malaysia rubber gloves. So finally he's turning bullish, okay? At the same time, rubber gloves lost steam. So on the 28th of December, you will also notice that's where is good news. What happens to good news? People sell, isn't it, right? So that good news has actually turned the stock market, but we also have to check the fundamental behind it. Now the more recent news, which is the 7th of February, early this month, it says that because of the ringgit are getting somewhere between less expensive or more expensive and the rising cost. We all know rising cost is there, right? So the question is, how do they price it in? So this has sort of made me think that maybe rubber glove, because of the bullishness, is there a possibility that this money will go? But Nora is definitely like, who is one of our member in here, is to sell. Whenever analysts turn bullish, ready to sell. When analysts turn bearish, it's time to buy too. I still remember that some of the stocks, they said like, these stocks you want to sell, but of course not all the time. Yeah, not all the time. So upon that, this is another philosophy of value investing we have. I will tell you how to be rich. Close the door. Be fearful when others are greedy. Be greedy when others are fearful. Just like the news we said here. Bullish is what? Bullish is greedy. So when it's greedy, people get rid of it and get out the share. But at the same time, the market now has started to turn bearish. after that news on the 28th, you can see the profit taking. So this was on today, 20th of February, no, yesterday, right? Supermax said that Chinese players are likely taken over as a global glove leadership, and it posts another loss making it. Basically, that's just a reason they couldn't make thing in here, and competition. All right, now competition is definitely been a part player. We all know that also happened to plantation stock, right? Now remember, previously plantation used to be our country main export. We are the biggest. I think 3 or 4 years ago, Indonesia came in and overtaken us. So the same thing is also happening in the era of rubber glove. We don't have to be number one. Most important, we have to be the most profitable company. By looking at a profit company, we want to be looking on the return of equity. Now, return of equity is one of the items we want to look at. But before we look at the return on equity, we also need to look at this thing called EPS. Anybody know what is EPS in fundamental? Give it a try. Write it out in there. I think Nora would have known. It's earnings per share. All right, earning per share is important, so we want to see quarterly earning grow bit by bit. So that's more important in what they say, because a lot of the time when the quarterly earnings started to move up, that's where we will see this market started to pick up. So that's why we want to look at the PE growth ratio, PEG ratio. That's something we're going to be exploring in here. So on that basis, we also want to look at the value investing philosophy, because we already said, right, when people are fearful, okay, when people are fearful, then it's time to be greedy, right? When people are fearful. So right now, the market is dropping for rubber glove after it was bullish. They came out with a report, which is the JP Morgan, and then we can see the profit taking start place, then the market drop. Right now is the right place. So the question is that to find out that if rubber glove is undervalued, which is cheap, or where overvalue is inexpensive. So by me teaching you, sharing you this technique called the PEG ratio, you will see whether what I said is good or reasonable, or in the case of the rubber glove stock, is it fair price, undervalued, or overpriced. So that's always been it. Now, of course, given all things being the same, we always want to look at the growth and value, because right now we are seeing rubber glove stock being beaten a lot. So we are looking in this era of value investing. Now, if you want value investing, then you're looking at current income, more stable stocks, and then you want to avoid value trap. And of course, we've seen a lot of growth investing, which I talked about last week in US, a big stock movement like we saw Tesla, Nvidia, Microsoft, the Magnificent Seven. Remember that? So those already sort of move up ahead of in here. So we are seeing another segment for the rubber glove, for the Malaysian stock, which is the value investing. But the key question is it still going to give us that good long-term return? All right, the good long-term return. Now, of course, when you look into its value in here, we got to look at the cash flow, steady income. Is it priced below intrinsic value just from the value basis? We don't want to talk about the growth right now, because the question is, can they grow this rubber glove stock? We already said China is taking up that leadership, that global leadership in terms of rubber glove manufacturing from Malaysia. So which means, and that is going to be a lot of supply in here. So price competition among the glove manufacturers is going to be very, very strict. So we are looking right into this, what we call the undervalue in here. So anyone from the rubber glove industry player or management, you need to take a look into what's happening right now, whether they are producing right steady income with stronger cash flows, or is it what we call destroying value. So we'll take a look at that. Now, in terms of the growth stock and value stock, we have to take cognizance. If you look back, even in the US context, right, the growth stock has outpaced value by 10% as 2023 near end. So will the trend continue? Right, and I think it's likely to continue as we've seen the era going forward, wherever the US FOMC Federal Chairperson are talking about rate cuts, which I did talk about it in many of my Wednesday night sessions. So you can check it out from the live Facebook in here. So the next question is, will that be a case for our Malaysian growth sector versus value sector. So let's examine the facts that we have in here. So we'll be looking at the Bursa, what we call value sector and the growth sector. One way I do this is taking a proxy. So if you look from since 2014, okay, let me just make this a bit smaller. So I'll pull this up a bit, then you can see it nicer a bit, right? And I'll go back to the last period chart here. So we have, right, value, and you can see from 2014, you can see this is like what, $30 and up to about 3 times. Okay, 3 times up already. And also value stock is up maybe 2.5 times. Right. Now let's extrapolate that into our Malaysian stock by looking into the indexes. The Bursa index for technology, right? It's 291%. So this is 100, this 300, this is almost 300% now, but in here is 291%. Very close, right? So you do see the technology, it's a much better bet. Then from the growth sector here, then we have the value. Okay, the value is where we are looking for steady flows. You can see finance just sort of break even, only 4.48% in terms of the price appreciation in the index. So if you are looking for growth, technically you might just put your money in technology, right? But tonight we want to be different. We want to choose to look at those undervalued stock and see whether this is a possibility that we can apply the value investing to the rubber glove stock by looking for growth. Because if you don't have this kind of trajectory growth, right, stock price not gonna move up. So that's why we want to apply the EPS, the earnings per share, plus what we call the PEG ratio. Okay, this is where I'll start introducing this, what we call the fundamental terms, PEG ratio, right, called price earning growth ratio. Okay, so by looking into that, we can see the stocks can really grow or not. Now if you look at Maybank, right, from 2016, the average return is only 4.5%, right? It make money every year, 7%, 11%, 2%, 6%, 8% here. Total average return is about 47%. No doubt you buy Maybank, you won't lose money, but no, you're going to make big money. But if you got in a stock like Inari, right, 2022 was a bad year. That one really collapsed, but you came back, we're up 16%. So Inari now is up 7%. You can see it has been generally a double-digit maker. All right. So if you compare to Maybank, again, looking for income, looking for stability, not the kind of volatility, then Maybank may be yours. Because I want to ask the audience who is listening tonight, are you looking for a stocks that potentially grow in the longer term? Because there are some of you still holding to your rubber glove, maybe a big amount, maybe a small amount. If it's big amount, it is hogging to your capital. And if you don't see that growing, like what we saw in technology stock, which, you know, from 2014, 10 years grow about 300%. So the question is, why don't you sell some of your rubber glove stock? And of course, some of you who are listening right now, if you still have that big bulk of rubber glove stock, put it in your comment and share with your audience. Don't be shy. You know, it's good to at least understand the implication, though, those of you who are looking at the growth impact of the rubber glove stock. So I just want to make my point very clear to you and give you a case. Should you hold on to your rubber glove? And if you, those of you who don't have rubber glove, should you be buying a rubber glove for a longer term? All right. So let's look at the growth and value proposition in here. Growth, we are looking at high potential growth rate and we want to make from capital gain. Whereas if it's a value, we are looking for undervalue and companies in distress. Definitely we know the rubber glove are in distress, okay? But and also whether they pay dividend, but I don't think many of them paying dividend at all. Then the question is, why would you want to keep them if they're not paying dividend? So let's look at the KLSE rubber glove sector. As I said before, tonight in here, the finance and the rubber glove. And one way we're going to be looking at, like Nora did it well, is PEG, okay? how expensive and undervalued based on the future forecast. Now, why we can make a future forecast? We know what's happening right now. We know something in the past. Then we can see whether what I've talked about, okay, just now, like the global leadership has already lost to China. So how are they going to get back the kind of earnings rather than they're not here just hearsay? A lot of time we listen to the CEO statement on the newspaper or on the TV, or maybe some of the webinar they invited them to come in. You may listen to him. He'll give you some sorts of outlook or projection which can be optimistically or some long very bullish, and then you buy into it. But here my proposition to you is to understand the implication of PEG, what we call earnings, price earning, and divided by the EPS growth. Now it's very difficult to do EPS growth rate, right? Which means if a CEO said that, oh, my rubber glove stock will grow by such and such percent, can you take his word for it? Because the Malaysian rubber glove, I've been saying organic growth for rubber glove is 10%. If it's 10%, why did the price break down so much? Because there's a lot of speculation in 2021 where the price gone up and a lot of analysts was also caught into it. But all that eventually evaporated, right? And now the rubber glove stock is even worse than what it is, partly due to overexpansion where there is an oversupply, and also the Chinese glove manufacturer has come into it, and right now Malaysia is definitely competing on that basis in here. So remember, PEG is still a human estimation. So you can see this, a fast company, they have 2019. This is where you need to do also a PE estimate. If you see from 215 to 320, that is a 50% growth. And remember, these are all estimate. It's all estimate. We also have to see the potential, whether they can do it or not, based on the scenario that we see in COVID, where we have a COVID case, then we see a lot of growth within very short period of time, 6 to 9 months in here. So if you take that, the 27 divided by 50, this will give 0.54 PEG. The lower the PEG, the better. Now let's look at another example. Slow growth. You can see $8 going to $8.65, right? A PE of 5.6. This is on the future. This is on the current estimate. Growth is only 6.7%. So when you have this number, 5.6 divided by 6.7, that gives a 0.84. So out of these two, which one would you like? Definitely fast coal, right? Fast company, right? That's a one. So that's the rationale behind this calculation in here. So what is a good ratio? Below 1 or above 1? So all things being equal, okay, you can see if the EPS is 10 cent, PEG of 10, P of PEG, okay, that will be a 1. But if the EPS is 20, the PE is 5 times, which is 50% discount, then you're looking at the PEG of 0.25, assuming the share price is the same. So that's where we want to be. So this will be better quality. Yeah, this is why we say that. The lower better quality, the lower the PEG, the better the quality. So keep this in mind. Now, it's always been very difficult, even analysts, to look at the PEG. So I will share with you another technique which I already done with our fellow members using the trading view indicators, right? But before that, let's take a look at the rubber glove player that we have. Again, this is from our industrial screen on the VSA 360 in here. Definitely it'll be great for you to use that. You can see Top Glove, Hata, Care Plus, Supermax, Top Glove, right? And healthcare equipment manufacturers. This is the one that we are interested. Hexcare too. So if you look from here, stock price is at $2, $2.63, Care Plus 34, Supermax 92, Top Glove 89 cents. Then the question you need to ask yourself is this price still good? Remember, right? We talk about wonderful price. Remember earlier when Warren Buffett said that you want to get a stock at a fair price, not at a wonderful price, because you may remember Hata Lega was like 20 something, 30 something. Kosan was at $8, and then Care Plus was about $2-3. Now it's 34 cents. Very cheap, isn't it? Wonderful prices. And what about Top Glove? I can't remember. Top Glove went to 20 plus something. right? But right now it's only 89 cents. So it's a wonderful price, right? If you look at it. But of course, we want to look in the future by using the PEG, all right? The PEG ratio in here. Now, this is how we look at a cosine. So what you want to do is to align your basic earnings. And I'm going to bring up the, that's right. I'm going to bring up, let me just change this to cosine, okay? So you want to apply this template for, of course, for our member. I already showed them how to do this. Now, this is definitely a free product. If you just need to work out how to do that, we won't be doing it tonight. And if you want to learn more about this, make sure you want to become a member of our Trade VSA membership, and we can do this during our live session, our live training session that we do. So if you look back at the cosine in the pre-pandemic, okay, now we look at the pre-pandemic, you can see the PE has always been 19 or 20 times, all right? You can see the yearly, this is the EPS, the earnings, okay, let me just label them, the basic earnings. This is the quarterly. So you can see quarterly, right, it's been steady. And when the COVID came, in March, June jump up, you can see June jump up, this was, okay, let me just go closer here. Yep, you can see here, right? So you just need to zoom, jump up to how much? 2.5 cents, it jump up to 5 cents. Though that's almost 100% increment. So you can see the PE already move up too, right? You can see stock price also move up. So that's why we always say, before the earnings comes out, stock price always move, right? And when it hit the high, just imagine that the high was hit in August 2020. But we hit the peak of the earnings in March. So this line along here is what we call the distribution. Someone already knows something. Okay, so you can see the stock price move from May to August just in 3 months, and then since then distribution. Of course, a lot of people were relying on this, right? But they didn't look at the stock price, right? They didn't look at the stock price. At the same time, that time the PE was like 58 times, 63 times. So there's always say for, would you willing to pay 75 times, 78? That is provided it can still grow. Now, if you look at Nvidia, some of the stocks, it is currently at this price. Let's use this as an example. You put in Nvidia. Right? So once you apply this template, you can also do the same thing too. So you are seeing similar here, right? You can see here where cosine prices came down already, right? So you can see stock prices came down at the peak of the earning. Now here, you can see here for Nvidia, stock price was still at the peak, 451. Now they haven't released the next, I think could be somewhere January. That's right, January 23rd. They've been delayed for the Nvidia, or maybe they haven't updated here. So you can see stock price has definitely moved up. So you can see two different conditions. Someone knows something about Nvidia. Why? We all know the generative AI continue to grow. But if you look back onto the rubber glove cosine, once the market hit the peak here, and that's why it's important to align this. You can't do it without TradingView. All right, so make sure you get a copy of TradingView. If not, you can find out how you can join our membership. And here you can see from here onwards, even though the earnings was 40 cents. Now previously it was how much? Previously it was only 2.5 cents before COVID. Okay, COVID 238, 253. Right, you can just go to 92.21. Now why is this important? Because when we see a normal line, now if you can break that up, right, this is yearly. This is quarterly. So you can see quarterly very steady only. Before COVID, market very steady, you know. So right now the situation is, all right, turning to today. They are still at 161. Now previously before that, berapa? You all remember or not? When I talk about it here, right? It's only about 19. No, it's not even 19 cents per earnings. It's less than 2 cents. Okay, 2 cents. So if you look back to here, 1.6. So when it hit 2 cents, that could be the peak already, right? So which means right now what we are seeing here is that there is a possibility 16 from this is because you're loss making. So loss making, the market jump up a lot. So for the next level of the climb, why people say it is likely to go back to 2 cents. So if you look back, what they call 0.016 cents to 2 cents. That is 0.4. That's a 40% increment from here onwards. That will be the peak, more likely from here. But the big jump was because it was negative to positive. That's why you saw the 1344. And then if you look at the PE, has also gone up 286 because the earning has not been reflected. The price has gone up. Okay, so this is one way to look at it. So the question you ask yourself, Kosan, if it can only go by 40%, so stock price will have to move higher. So the question is, once you hit 2 cents, 0.02, can it grow more with the future that we have? Certainly a lot of uncertainty. Definitely in the shorter term, what we see right now, it is a trading opportunity, right? So when you see a green pentagon, that's where you want to do your thing, yeah? Okay, that's the first one. Okay, can you understand? If you can understand, just type, yes, I understand. Right? If not, I'll probably just want to pause and take 1 or 2 questions. How we look into this market. Next one, we'll look at Harta Lega, aligning the quarterly earnings together with the earnings for the year to date. So next one we're looking is Harta. Now if you look at Harta Lega, okay, if you look from a longer term view, again, very similar picture. Okay, put it down. Right. Now, the market hit peak in August 2020. You can see here, August 2020, right? But the earnings hit peak in June. Right? But you notice by the time June, you hit peak, you sell, how much money have you lost? This thing went up to like what? How much was this? Pull down a bit more. Was around $16. It came down to, when you hit here, it's down $6, right? So that's why a lot of people who believe fundamentals at that point in time doesn't know about the distribution of the smart money. Lost a lot of money in here. All right, I have to say, I myself had lost some money too. Okay, so this is why it's important to look into the market. Now again, the similarity when we compare to Nvidia, the potential of the growth is still there. So here, that tells you the future when the market was at that time, June 2021. They know this market was not going to go anywhere. It's coming down, and since then, the market sort of flat out. So right now, we are seeing rubber gloves started to make up. All right, the PE is still negative because it's still loss-making. So let's take a look at before Harta Lega. What is the earnings before the COVID, which is around 2019? It's also, you can see, 3.6 cent, 2.7 cent, 2.8, 30 cent. We just need to get a rough figure, the usual kind of earning, right? 3 to 4 cents. So 3 to 4 cents is where. So let's look at the 3 cent. So right now it's still reporting negative. So comes January, okay, if you report positive, this fella will jalan again. So right now you can see, apa itu? It's 262. It's 262 because eventually they will report a positive earning, and then you can see the jump going to be a big jump because you can see from here it was still negative 0.015, then negative 0.66, right? So when it comes to January, if you look back, usually January, January, September, December, okay, you have March. So has it reported December? So March, the next will be March. So will March be a good report? Now, if it normalizes back to the usual, right, we are talking somewhere between 0.02 cents. So this is right now is 0.06 to 0.02. Then again, that's a significant 100% jump. But before this result comes out, you'll see stock price start to move up. So take note of the rubber glove. So that's why I'm doing this reassessment. In short, it becomes a trading play. Okay, because if you do hit around the 0.002 cents, right, which means this will probably be 30 or 40% earnings. Again, the surat khabar will heboh-hebohkan already. Guess what? Heboh-hebohkan, more bullish distribution. Like what you see right now. Okay, so this is the whole idea behind it, and I think Nora understands it very well. By applying the EPS to it, you can see this makes sense or not. Let's look at another one. Supermax. Let's look at we've seen let's look at Top Glove. Okay, since it's a more popular one also, let's look at Top Glove. So you see from here, Top Glove, let's go back to before the COVID. Switch to a weekly chart. Okay, so you can see before COVID, the quarterly has always been steady one. Okay, you see here, just go straight to it. Okay, 2019 was like 5.6 cents, 4.7 cents, normalized 4.4 cents, so around 4.5 cents. Here it went up to 22. Then it went up to 95, and that's why you see again similarly, like Kosan and Top Glove, someone know that this thing cannot grow forever and start to distribute already, right? So where we are right now as of November, so the next report coming out will be February. Okay, so because if Top Gloves is on February, then that will be the barometer that sets up for rubber glove like Kosan. So you can see there about 4 cents. Now right now that is let me see, quarterly is how much? Quarterly, go back to here, is around, positive one is about 1 cent. 1 cent, 1.4, so 1.4, 0.014. So now is 0.7 also negative. So if it turn positive in February, again before the result come out earnings, stock price will start to move out. So if you do that, what you want to do is to bring this up, get your Pentagon guider ready. Your Pentagon guider ready, and once it start, I'm just trying to figure out how to drag this up, but apparently I can't. I only can do this way. So just right now you can see the market hasn't turned green Pentagon yet, but the result in coming February will come, because if we see an improvement in the results that we see right now in here, breakout will start first. Okay, so keep that in mind. Okay, and we'll do one more, last one. Last one we'll do is AP4, which is a Singaporean Riverstone rubber glove company, right? And you can see this one has a different take altogether. Okay, so let me just bring this up. So you can see this one before COVID was around, okay, before COVID was doing Singapore 0.067, so 0.7, but this company 0.067, this is already doing 0.67, so 0.1. So if you look from here, it's actually doing much better than the PLSE. So that explains this Riverstone actually have growth. So that is a really good news, which means the quarterly earnings definitely was better than before the COVID. You can see here 2.9, this one is 7.6, betul? Yeah, 7.67. So definitely this is a good barometer showing Riverstone is also in Taiping and also in Rawang. They have a factory there. I visited them before, Riverstone, when I was a fund manager. So on that basis, this will probably tell you, right, the coming earnings will be positive. You see, September was a positive for Riverstone, although Riverstone do some of the products slightly different. They do a lot of nitrate gloves compared to Top Glove and Kosan. But that shows you this market is ready. So you can see Top Glove ready to push up. So on that basis in itself, on a shorter term, right, don't sell your rubber glove stock. Right, wait until it turn green Pentagon, wait for the quarterly earnings, just keep an eye on that one. You can check out some of that through your broker or through your trading platform. They have those quarterly earnings and see this trend. This trend is important to build the understanding of the stock. Okay, so we're going to do one stocks for the audience. The first one I see on the comment, I will do analysis for the pack. If you have any, type it in there. Okay, if you have any stocks, I will just do one stocks for the remaining time. Okay, I want to analyze one of the stocks for the member. So if I don't get any, okay, let's move on. So as a summary, okay, as a summary, the rubber glove stock, there's a lot of uncertainty ahead. Competition, yeah, I know. Now come back. Always okay. Let's look at A Health. Okay, this only one. Okay, A Health, Apex Health. So if you look at Apex Health, right, stock price continue to go up. So you can see the quarterly earnings has gone up here. Okay, has gone up from 8.3 to yearly to 14 cent, which explain lah, right? Remember, this market goes up in here. So right now, Apex Health is around 260 something, but quarterly earnings has dropped. So you have to be very careful. So because if we look back on the quarterly earnings, usually it is around 2.2 cents. It dropped to 3.3. If it drop back to 2.2, then it will come back down lah. Okay. So because right now the PE is kind of low, 4 to 5 times. Okay, that is because the earning was high. Okay, the price did not move up in here, but I would start to take some profit too, because if Apex Healthcare cannot sustain this one big movement in here, you can see this movement between 3.5 cents to 45 cents. That's a lot of movement, isn't it? Yeah, 46 cents, and that explains why the stock started to move up here. Remember, in this case, so for it to stay up, this one have to have another move up. But if it normalize back to here, then not much of the opportunity. Okay, that's how I see it. So a lot of competition undercutting, but we have seen just now analyzing with it that awaiting the end February, alright, target profit ED, okay, already target ED, and remember, because of the what do we call competition and the result coming out for Top Glass in February 2024, so that will be a good indication. But usually the stock price will break out first before the earnings comes out. If the stock price don't break down, then it's reverting back to long congestion on the sideway. Let's hope it's not. Let's hope it's going up in here. The old peak around the $16 or $8, whatever, I don't think is unattainable before, because we don't see the kind of growth looking at the PE. So if you are long term, you need to wait. But shorter term, like what we say, you can trade the rubber glove slot using the method. Wait for the green pentagon, right? And those reasons that I talk about, the EPS earning, right? And the historical earning, you can trade them. All right. Now, of course, we always here like to promote our VSA 360 membership. And if you're not a membership yet, you might want to consider, as every week I will broadcast the weekly membership to all our members to the our channel in here, and they can catch up. So in the channel, I talk about stock fundamental stocks. You can see from here, not all of them make money, and these are the stocks that I pick up also from the Smart Robbie, but I analyze them. You can get best of my opinion and comment in here. So you can see some of the ratings has done pretty well. We have the current price around here. It's gone up like 11%. This one was down, but generally most of them are turning positive. With the Tasco, one exception in here, but I do give some of the reasons why you should keep on to this one in here. So check out the weekly podcast. If you are a VSA 360 member, don't forget about this. So reviewing a major event, I will not going to talk about it tonight, because I've talked about it the last work. Maybe next week I'll just go back and update all your members. But you can watch this, look at the slides, and remind yourself of the dates. Now, of course, time and time again, our members, right, continue to outperform average trader and investor. As I said before, if you are not a member of our Trade VSA, you might considering, and check out this QR code on top to share with you why our members outperform the average trader. So if you have been really struggling or really enjoy some of our lessons that we share tonight, like our live Facebook and more of this every Monday night, where content and video recordings are available, be a member. Just like some of our members for the short 6 month made a 16% return with a 67% win rate, which is, in my opinion, a definitely good rate in here. All right, so think about it. For our VSA 360 membership in here, we continue to promote, because we believe investment in knowledge pay the best interest. So if you're not currently doing very well, right, may want to look into our membership in here. And don't forget, join our free talk every Monday and every Friday for our breakfast talk in here. That will put you in the right way. And if you're not in the US market, please open up an account with USmart and get all the benefits of cheap commission, good quality service, and use the joining invitation code NYVJPA. Alright, so that's all we have for tonight. I hope you all learned something, keeping it short, less than an hour. Thank you for coming tonight. And if you have any question, post it in there. I'm happy to watch it. But do use the PEG earnings per share to your benefit to know whether it's worthwhile to hold on or not. And anticipating is the best move. Be greedy when others are fearful, and be fearful when others are greedy. Use this QR code to join our membership and learn more. That's all we have. Good night. Thank you for coming, and God bless, and have a good trading week ahead.